Hi, welcome to this video, which is all about simple, effective Forex trading strategies that can help you win longer term, give you an edge. Now, in terms of the strategy we're going to look at today, very simple. It's one of the best strategies for anyone who is a busy person who wants to trade Forex, without spending too much time on it, and also for traders who have a problem controlling their emotions. Now, the strategy itself did as an introduction to it in a video a few weeks ago, and basically the strategy very simple. You have a 4-point checklist. Anyone can do this checklist. It's related to simple fundamental analysis. If all 4 points on the checklist decisively favor one currency over another, you can buy that currency over the other one in the pair, or consider doing so. Once you've generated the trade idea, the technicals for entry and managing the trade are just extremely simple. The logic of the strategy is easy to understand and have confidence in as well. Now, in terms of the strategy itself, it really does help traders manage their emotions. And a lot of traders obviously have problems with their emotions. And one of the main reasons why is they're focused on pips. Pips on their own are of no importance whatsoever. It's to do with percentages. You've got to see percentages rather than pips. Once you do, you will see that basically you can make a lot of money from the Forex markets without getting stressed out by using small trade size. A lot of traders will use trade size that is way too big. This strategy, small trade size, but it will make a lot of money over the longer term. Also, in terms of the time you spend on your strategy, hardly any time at all. You can do it just by looking at price action once a day. Now, in the last video I did when I introduced this strategy, I used the examples of the NZD against the CAD and the AUD against the CAD as two currency pairs where the fundamentals clearly favoured the CAD and wouldn't turn around anytime soon. That still is the case. Both pairs have done quite nicely. Now, I'm going to go through those pairs and obviously the strategy, and also some other pairs with the checklist that I see right now. In terms of the other video, I'm not sure if I said it earlier on, but I'll put a link to it beneath this video so you can watch it if you wish. Right, now what we're going to do is we are going to go and take a look at the charts, but please keep in mind when I'm doing my analysis, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, just simply click on the link beneath this video. You'll get live access to our member centre. Right, just let's go and update, first of all, NZD CAD and discuss the strategy and then look at some other pairs as well. Right, let's take a look at the charts. Have a quick look at NZD CAD, and just in terms of quote, I put it across the top here. Really like the quote, but I don't know who said it, so it's anonymous as I've put up here. But it was basically big fundamentals rule the long term, sentiment rules the short term. You can see that in any Forex pair. If Forex currency or currency's got an advantage over another one, clearly in terms of the fundamentals, you get a big trend. Of course, you are going to get sentiment spikes in the short term when, for instance, in this case, prices have run too far to the downside. And, you can see it's a nice big downtrend. And you get a nice rally, sentiment rally, another sentiment rally, but the big trend is down. Now, the fundamentals will give you the idea. Okay, we'll go through the checklist in a moment. They give you the directional bias. So you know where the big fundamentals are going to impact, which currency they're going to benefit more than the other. There's no point in trying to catch a big trend technically. I've said this on numerous times. Just by looking at price action, you don't know what is going to happen. Just from price action, you need to know what's going on behind the chart. Technicals, though, extremely good in terms of managing the trade once you've established that directional bias. Okay, now in terms of NZD CAD, AUD CAD, we were saying it in the last video, the fundamentals just so clearly cut in favour of the CAD on all 4 points of the checklist. Let's have a look at the interest rate outlook first of all. Well, we know that New Zealand is basically in a cutting cycle. They've cut rates, they're going to cut them again. Canada isn't. Canada was on hold. Better interest rate earnings, and they're not going to be cutting as quickly as New Zealand. Okay, so point one obviously favours the CAD. Domestic economy. Well, just look at the data. Canadian economy is doing pretty well. New Zealand is not. Okay, and then you've got to look at the trading partners. Okay, now trading partners very important in terms of these two currencies. New Zealand is exposed to China. Well, we all know that China is slowing up. We can forget about all these trade tariffs, and if they're lifted, China might do okay. It won't. It wasn't doing well before the trade tariffs came, and it won't do well if they're lifted. I personally don't think they will do. So China's slowing up really quickly. American economy is pretty robust, so Canada benefits from that. Obviously, New Zealand gets hurt by obviously the China slow up. So points 1, 2, and 3 clearly in favour of the Canadian dollar. Then you have to look at geopolitical problems, if there are any, and the personality of the currency. Well, no real geopolitical problems in either country. Personality of the currency, well, all three are commodity currencies. Okay, so they're all sensitive to global risk. However, of the three, the Canadian dollar is seen as the safest. So point number 4 favours the Canadian dollar as well. Now, in terms of if you're trading big trends, forget about pips. Work out basically the percentage change. Okay, and what I've done here is I've just put no leverage percentage change. We're just above 86 at the moment, but I've got a target, first target, as 75 on the downside. That's 12.79% with no leverage. Okay, now obviously that target's got to be reached, but the big fundamentals just so clearly in favour of the CAD. They don't look like they're turning around, so that is achievable. Just 2-to-1 leverage will give you 25% plus. Most Forex traders can't even make 30% in a year. This one trade could almost do 30%. If you got to second target, it's obviously longer term, 65. It's 24.52%. No leverage. So you can see once you start thinking in terms of percentages, you don't need to use much leverage and you focus on the longer term. With this type of strategy, you're not interested in what happens day to day or even week to week. You're focused, in terms of looking at the pair over a month or more, or many months. You're after the long-term gain. You're not going to have to make a lot of effort in terms of watching charts or anything with this type of strategy. Now, in terms of the way we've been playing it, we actually have done a few videos on this pair. When we came up here, we sold it at 91.80. She comes through the round number again. Just felt she was extended, and the smart money really short on the COT net traded positions, which is always a good sign for us. Then we want to manage with price action. And what we always look for is the 20-day moving average, the big trend to break. It breaks decisively on this red. A few pokes to try and get back through it. We don't think it will achieve it. Doesn't. And then we go down. Come back again to test the 20, get down. Keep going down. We've generally got our stop behind the 20-day moving average, and we get hit at 88.80. So basically, we will take 300 pips off that trade. But we know it's a big trend. Okay. Sorry, that line's a bit thick. Let me make it a bit thinner. There we go. We know it's a big trend, so we just want to get back in. That's exhaustion. We will come back in at 88.50. Then we break the 20 again, down. We get across the 20. It doesn't matter to us. We've got our stop. We always have our stop well back from the 20. I'll discuss a little bit more about this in a moment. So we get back above the 20, but just fall away again. Okay. Now, we would normally manage with round numbers. So, for example, we are at 86.62. Okay, so where do we want our stop? We want it one full round number back, or more than one full round number. So our stop at the moment is at 88.30. Okay, so what's going to happen is you're going to have to get back through that round number, then clear another round number to get our stop. Okay, so it's normally one round number in between, and we're back behind that round number for our stop. So 88.30, and we're obviously below the round number of 87. So that is the way we would normally manage big trends. And yeah, if we do get stopped out, we'll just key off a round number to come in short again. Okay, so we did get stopped out, but we came in 30 pips lower than our stop. It's not rocket science what we're doing here. Using round numbers is very, very effective, and the CAD looks pretty strong, pushing the NZD down. I wouldn't rule out the NZD rallying, but yeah, we'll just focus on the big levels, stay outside of the noise, and keep our eye on the big fundamentals. Those big fundamentals, yeah, we looked at them in the last video, and even in the first video when we first did this trade. It's not turning around anytime quickly. Sure, they might turn around at some point, but they're not yet. So far out of this trade, I think we made about 3 or 4%, and not a huge amount, but yeah, it's looking good. I think, yeah, 12.79% more to come on the downside, and no leverage. Okay, got a little bit of leverage involved, then yeah, obviously the gains are better. You can kind of relax with this kind of trading strategy. You don't have to watch price action all the time. You're focusing on the bigger picture, the longer term, and the percentages that you can make, not over a few days or a week, but over a month or longer. I know plenty of traders would be hopping in and out of this pair, trading every twist and turn, and probably not getting anywhere. And that happens in a lot of Forex pairs. It's really designed for traders who want to make money, like I said, longer term, without too much stress. Yeah, and not really spend much time on their trading. Yeah, those 4 points are so clearly in favour of the CAD, and they are on the AUD CAD as well, which we'll look at just very quickly, and then we'll look at a couple of new pairs in relation, in relation to the Forex checklist. So let's go have a quick look at AUD CAD. Right, just on the chart of AUD CAD, and in terms of this chart, I'm just going to do it quickly, use chart from our member center. The actual checklist is exactly the same, really, as for NZD CAD. NZD and AUD, similar personalities, both exposed to China. Both have got problems in the domestic economy. Both are cutting interest rates. We're in interest rate cutting cycles, and yeah, the RBA will be cutting interest rates again going forward, just like the RBNZ. Now, in terms of this pair, very similar way of playing it to the other pair we just looked at. We got up here, see the price still at 96. We'll sell off the level, get in at 95.50, get the crack of the 20-day moving average we want. Down she comes, but then she springs back. She comes through the 20, and our stop is just back behind that level at 93.70. So not a bad profit, but yeah, not a really big one. But yeah, we get stopped out and the sentiment push up. But then, yeah, you can get stopped out with this strategy. It doesn't matter. You can get back in. Just play the round numbers. So we see it stall up to 94. And we'll just come back in at 93.30. So 40 pips lower than where we came out. We'll get snap to 20 again. Down a little bit of sideways. 1 test, 2 tests, 3 tests. Down, moving away from the 20. And yeah, kind of bearish candle on Friday. The stop here is a little bit closer. I've just got it at 92.50 because I just want to lock a small profit for stopped out. I can always get back in. Okay, I personally think we should run on to the downside. So nothing complicated. Again, just keeping our eye on the big trend generated by the big fundamentals, managing with price action. Now let's look at a pair that I think looks quite attractive in terms of this type of way of trading, which is SGD JPY. And in terms of the checklist, obviously I'll do it in terms of SGD JPY, but do it in numerous pairs. And I stress now that a lot of those USD pairs that we looked at in yesterday's video look really attractive from the checklist as well. But let's go and take a look at SGD JPY chart. Right, just on SGD JPY, I know it's a lesser looked at pair, but often say lesser looked at pairs can often give you great opportunities. And this one looks like it could be shaping up to be quite a nice trade. And you can see here on bottom left, I put target monthly support, big monthly support at 65. Percentage change, no leverage if it would get there, 17.72%. And I think it could do that in the coming months. Now, in terms of, before I do the technicals, fundamentals and the checklist, interest rates. Well, we know Japan has got stimulus. It's at its limit. It's at its peak. It will be coming down. It will not be expanded. Okay. On the other side, we've got Singapore. Interest rates will be coming down. Okay. They'll be reducing rates in the coming months. And that's all to do with what's going on in the domestic economy and also with its external trading partners, which will just go through the Singapore side first, and I'll go through the Japanese side. Not much internal consumption really in terms of Singapore. It's a very export-led nation. It's very focused on Asia, and its exports are slowing. There's an Asia-wide slow up. So you've got, for example, not just China slowing, but you've got Taiwan slowing up. South Korea, the real powerhouses of the region, all slowing up. That slowup is not going to turn around anytime quickly. That's going to hurt Singapore. Also, it's going to hurt Singapore is it's the major transport hub. And look at how global trade is dropping. It's dropping dramatically. Okay, global growth is obviously slowing. All impacts on Singapore. Interest rates will be cut. What about Japan? Well, Japan more insulated in terms of the domestic economy because it's much bigger internal consumption. Also, in terms of exports, Japan doesn't just export to Asia, does it? It's got a lot of multinationals. It's worldwide, and basically will hold up better than Singapore. But in terms of this pair, you need to look at the geopolitical and the personality of the pairs as well. Geopolitical situation. Global trade start big. It's going to favour the yen. The yen will get a real boost if we move the risk off. But we're pretty risk on despite the slow up in the global economy. But the slow up in the global economy, the yen will benefit. It hasn't been hurt basically by risk on anyway. You can see that from the chart. Okay, the yen has made good headway. Pushed the Singapore dollar down. We're obviously just bullish of the yen just about everywhere. But this pair looks, for us, attractive. So limited upside and plenty of downside in our view. So in terms of technicals, I'm going to say that looks good first level resistance. Second level resistance, I could take the chart a bit further left. But that 80-50 level, pretty significant. These two candles here, that candle tries to hold, that punches through. Can't get back up there. So those levels of resistance should hold, in our view. But where would you sell? You could obviously sell a failed rally if we got up there. But at the moment, what I think is with this test here, came down, went through the 20. Now it's sort of trying to get higher. Draw trajectory in there. Trajectory there goes obviously through the low, that body and that body. You really want to get clear of that low and the 20. So through the 20, I won't wait for new chart lows. Just sell through the 20, 79, 40, I think would do it. 80, 60 would be the stop. Then see if she runs. Now, in terms of pairs with that checklist, there's plenty. Okay, there's plenty in the USD at the moment. After that recent US dollar correction, I did a video on the USD yesterday. For example, USD SEK, USD SGD looks good. NZD USD short. Plenty of pairs, which I think could offer good long-term trends. I think with the USD, if you look at the longer term, sort of charts, the USD is an uptrend. That recent correction based upon how far market thinks interest rates are going to go down, just push the USD down too far, makes it a buying opportunity. It's got big fundamentals in its favour in our view. This sort of strategy, like I said, patient traders. I will actually probably do something in the site on the best real long-term trends for this type of strategy, but you don't have to watch price action all the time, hardly at all, and yet you can make really great gains with it if you're interested in making money. Following long-term trends is a great way to do it. We kind of mix our trading up. We do have our aggressive swing trading, but we also have our long-term trend following as well. So yeah, I think I've covered everything I need to cover. It's a good way to trade in my view, but you probably gathered that already from what I've said. So that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.